I'm willing to bet most of us have played Monopoly at some point, right? It's that classic game where you get to feel like a real estate mogul for a few hours. But what if I told you that hidden inside that box, among the paper money and tiny plastic houses, are some of the most important financial lessons you could ever learn? I mean, it seems pretty simple, doesn't it? You're just rolling dice, pass and go, collecting $200. But it turns out, this game is an incredibly powerful simulation of the kind of financial wisdom you need to succeed in the real world of investing.
Because if you've ever been locked in a marathon Monopoly session, you figure out pretty quick it's not really about the luck of the roll, is it? It's all about strategy. In a lot of ways, the game is like a mirror, reflecting some of the most fundamental principles of finance.
And that is the key right there. Everything from how you manage your cash to how you diversify your properties, winning in Monopoly is built on the very same foundation as building real long-term wealth. So let's dive in and break down exactly what this old board game can teach us.
All right, lesson number 1, and this one might just be the most important, both in the game and in life. Cash is absolutely king. It is the lifeblood of any financial plan.
And you know, the game gets this so right. We've all seen that player, right? The one who buys everything they land on no matter what. And then, bam, they're out of cash. The next time they land on someone's hotel, they're forced to mortgage their best properties for half price. Well, the exact same thing happens in real life. If you don't have cash set aside, one unexpected car repair or medical bill can force you to sell your best investments at the absolute worst time.
I mean, we don't have to look far for a real-world example. Just think back to the 2008 financial crisis. So many people who are over-leveraged with no cash reserves got completely wiped out. They had to sell their homes, their stocks for pennies on the dollar. But the people who had cash, for them, it was the buying opportunity of a lifetime. They scooped up incredible assets at huge discounts. In the end, they were the ones who won the game.
Okay, so lesson number 2 is all about patience. It's about having a disciplined game plan. It's not just about what you buy, it's about the how and the when.
Think about it. That player who buys every single property they land on without a second thought, they almost never win. They spread themselves too thin, run out of money, and go bankrupt first. In the same way, investing on a whim is basically just gambling. You're just hoping things go your way. The most successful investors are disciplined. They wait patiently for the right pitch.
A perfect example of this, the one and only Warren Buffett during the dot-com bubble back in the late 90s. Everyone was going crazy for tech stocks, and people were actually making fun of him for sitting on the sidelines. But he stuck to his discipline. And when that bubble burst, his patience saved him from the absolute catastrophe that destroyed countless other investors.
All right, so that brings us to lesson 3. And this one is a big one. It's about figuring out what makes an asset actually valuable. And spoiler alert, it's not just about owning the most expensive properties on the board. It's all about income.
I mean, how do you win Monopoly? It's simple. You collect rent. That steady, consistent stream of cash flowing into your bank account from your properties, that's the name of the game. And it's the same with investing. The best long-term investments aren't just things you hope will go up in price. They're assets, like solid companies, that generate real, consistent, and hopefully growing cash flows. You know a great example of this in the game? The railroads. A lot of people just pass them by. They're not as glamorous as Boardwalk, but check out these numbers. You spend $800 to buy all 4. After that, you collect $200 every single time someone lands on one. That's a 25% return on your investment. That is a cash flow machine, my friends. Okay, for our final lesson, let's talk about managing risk. Because you just can't put all your money on one color group and hope for the best, right? You have to spread your bets out. Sure, owning Boardwalk and Park Place feels amazing. It's the crown jewel of the board. But it's also a super risky strategy. You've poured all of your capital into just 2 squares. If people keep rolling past them, you get nothing. All that money is just sitting there, not earning you a dime. That's what we call concentration risk. Now let's flip that. Compare it to a more balanced board. The player who usually wins is the one who has properties sprinkled all over the place. Maybe the oranges, the reds, a few railroads. They have so many more chances to collect rent. By spreading things out, you lower your risk of one part of the board going cold and leaving you high and dry. And what's crazy is how true this is for real-life investing. You might think you need to own hundreds of different stocks to be truly diversified, but that's not really the case. Studies have actually shown that once you own about 15 to 20 different high-quality securities, you've gotten most of the benefit of diversification. The key isn't to own everything, it's to diversify intelligently. So there you have it.
4 huge lessons from, of all places, a board game. The big question now is, what do we do with this? How do we turn this into a winning strategy for our actual finances?
It really boils down to these 4 things. First up, always keep cash ready for a rainy day or a golden opportunity. Number 2, be patient, stick to your plan, and don't make emotional, impulsive decisions. Third, focus on what really matters, cash flow, buy assets that pay you. And finally, number 4, spread your bets. Diversify your investments so you're never too exposed to one single thing.
See, the principles are actually pretty simple. Whether you're playing with colorful paper money or managing your actual portfolio, the game has shown us the rules for building wealth and avoiding financial ruin. So the only question left is the one you see right here. What's your next move?